Hello, traders. Gary Wagner with the Gold Forecast here on Thursday, September the 9th, and this is the Daily Report. Forex Gold is currently trading under pressure right now, trading at about 1247 to 1248. Traders, it looks like we got the dip or the pullback. It might be the beginning of the pullback. It might be a very, very short-lived pullback, but I think we finally got the pullback that we were looking for. That's why when I talked about, for those that wanted to go long yesterday, to go long very, very light and to save a lot of ammunition, if in fact we get the pullback, I think we're witnessing it. And here's what I'm looking at. First of all, classically, on a candlestick pattern, we have a three-river evening star. Our white candle, our doji in the center, and then, of course, our black candle. When we look at our weekly, that's over here. We do have, for the first time, a star formation forming. Now, if you notice, on the top of this last move where we hit our record top, if you take a look at it, we had this large red candle, this week that was a doji, and then a long down week on the following week. Do we have a similar setup happening here? That's something we'll have to wait and see. Here is what I am amazed about, though, traders, and that is the sheer buying power, even under pressure, in this gold market. Traders, do I recommend going short this market? Absolutely not. I am looking at a buying the dip mentality. And here's what I'm looking at. My sentiment is this. Right now, I've put up our Fibonacci retracement from the bottom of our wave 1 to the top of our wave 1. As you can see, when the market traded lower, it traded under significant pressure, down about $12 in the COMEX. It has come off that extremely strong. As I said before, typically what we see in these dojis is the fact that the market is just kind of retracing a little bit and then bursting back up, retracing a little bit and then bursting back up. We have seen this market really, really pull back up. Now, where could this pullback in fact go to? Well, I personally don't see it going any lower than the 38% retracement level. That's 1222 right in here. We almost took out this 23% at 1238 today. So my sentiment is this. What I am looking at is, as I said, I am extremely bullish long term. I have been expecting an end of this wave for some time, and we haven't gotten it. The trading day is certainly not over, so I can't tell you that, in fact, this market will begin to trade lower. But we have gotten the first signs that, in fact, we can begin to look at this top here at 1261, 1262 as a top or an end conclusion to wave 1. Traders, I think another thing that we want to pay very, very close attention to, and what is going to be extremely critical, is how this market closes right in here. Because when we take a look at some of these other candles, take a look at this Friday's session, which was hangman-like. When it was at its lows, the candle looked like this, and then came up off of those lows. In the same way that when this market was at its low, the candle looked like, let me try to draw it in here for us, looked like this. And as you can see, it's beginning to come off of the lows. The question is buying the dip mentality going to come in here at this point, or are we going to begin to see the market retrace? I am expecting a correction, and I have been. I'm looking at this correction as an opportunity to position ourselves in terms of price with a nice position on the long side of gold. Traders, no man is an island here. And there are other technicians that I do work closely with because I respect the work that they do. One of them is Dave Bannister. We were speaking this morning and he did send me out a chart when we talked about our sentiment and our feelings, which are both on track in terms of we feel the same way about the bullish nature of gold as well as the potential pullback here. Both of us use Elliott Wave. We're Elliott Wave technicians. His specialty is a couple more Western technical indicators where I kind of specialize in candlesticks. So therefore, you're looking at a bar chart. But with his permission, I did want to put this up, and I want to show you what he's looking at, and that is this beautiful pennant formation that we see, which falls in line definitely with the wave count that we have, as well as the potential for a pullback and a very, very large move to the upside. So traders, what am I looking at? I do believe, and we'll have to see if we get follow through, but if we do not get more buying the dip mentality, if we do get follow through in here, we are witnessing the end of that wave one. As long as you purchased extremely, and I say extremely light the other day, and saved enough ammunition to go 3-to-1, 2-to-1 minimum, but 3-to-1 cost average, we will be looking to add if we're fortunate enough to see this market either go to 1236, and as I say, I think the bottom really is going to be 1222. I do not see it going below a 38% retracement level. However, we are getting this extreme bullish scenario where the market seems to get these profit-taking rounds, and then we do get the market recuperating. However, in this particular instance, we haven't seen that. It has come off of the lows, but is still trading under pressure today. As I said, trading down anywhere between $8 and $10. It was $12 in the COMEX. So we are going to have to see. But it does appear at least tentatively, that we did in fact get the dip that I have been waiting for. This has been Gary Wagner with WFG4X.com, wishing you, as always, good trading, and we'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.